guys, welcome back to the series for the small business owner. We're talking about how do you guys buy that piece of commercial real estate. Today we got a top 10 list on why. Why do you need to do it? It makes so much sense. We've got 10 reasons today. Here's the first one, debt reduction. So when you make a payment, a piece goes to principal and a portion of that payment goes to interest. So the piece that goes to principal is money right in your pocket. And it is essentially a forced savings account. Now the interest piece that you get, that's actually a tax write-off. So you benefit all the way around. So the first thing, debt reduction. Number two, you get the appreciation of the building. Historically, if you look at any numbers, whether it's residential or commercial, you'll see an increase of about 2 to 5%, depending on what research you look at, of what these things go up in value. Now you're gonna have those times where it doesn't. And like in 08, things went down, but what happened after that? They generally come back up. So there's times that it doesn't do that, but the majority of the time, historically, it goes up in value. Number three, cash flow. So you buying your own building, you have the ability to buy a little bit bigger building than what you actually need. And that's what I actually recommend to you guys. If you do that, you can rent that out to someone else. You take the main space, they take a portion of it, and then you get to reduce your rent essentially. Number four, you got the tax benefits. So my recommendation is you have the building created in its own separate LLC. So now you have the business operation and now you have the building LLC as a second entity. So what happens is the building pays rent to the LLC just like you did before when you paid the landlord. And you, as on the business side, get to count that as a full write-off for a rent payment. Now on the LLC side for the building, you get to write off your taxes, you get to write off your interest, and you get to write off something that's really cool called depreciation. All three of those combined offsets the rental income of what you make on the building side. So ultimately, you get to own this building with very little tax consequence. Number five, this one's really cool. Your rents never increase again. So if you've been in a building for 20 years, you know what happens. Rents in year one are completely different from rents in year 20. And they could be 2-3 times what you started at. But when you buy your own building, you lock in on that rate. It is a loan that it's in place and the rents never go up again. Number six, you have the net worth. So you are essentially adding to your net worth. And what is really cool about this process, and you see this with real estate investors all the time, when you finally get over the fear of the first one and you acquire that knowledge, when you get the skill and the confidence, then you go buy a second one. And that's the evolution of these business owners, is they buy one, they feel comfortable about it, they know the process, and then they want to go buy another one and another one and another one. So this could be a new business venture for you. And I've had a lot of success stories with my business customers that have bought multiple businesses as they continue on in their evolution as a small business owner. Number seven, you are actually more bankable to the banks. So unfortunately, what's going on in banking these days, and I know it too well, is banks only want to lend to the best of the best small business owners. When you own your own building now, guess what? You're elevated in their eyes. And so what once was very difficult for you to get a working capital loan, let's say, now that you own your own building, let's say you paid it down for a few years and you've got the appreciation of it and you've got this nice equity piece in there, you could potentially do a second lien on the bank. So you actually become more bankable to the banks for your business and the growth of it. Number eight, leverage. A lot of times leverage isn't good, but in this case it is. So for as little as 10 to 20% down, I know that's going to be a hurdle for a lot of you guys, but you get the bank to finance 80 to 90% of the value of this building. So if you buy a building for $500,000, 10% is only $50,000 down. And then you get the bank to carry 90% of that. So in this case, that leverage is a really good thing for you and your business. Number nine, perception. So this is hard to quantify, but it's very real. Your employees and your customers are going to perceive your business in a little bit higher light than they did before because you have your own building. There's a perception there that you've gone to another level, and it's very real. And I would argue that even in your own mind as the entrepreneur, you're even going to have a little bit of perception on your own end that you've gone to another level. And number 10, we don't necessarily like to talk about this, but it cushions the blow if you go out of business. So if you are in the hole on your business, $200,000 to $300,000, but if the equity in your building is $200,000 or $300,000, then that that makes that loss back down to a zero. So it cushions the blow in the event that your business was to go out of business. So there you have it, guys. That's the top 10 list of why you small business owners need to own your own building. Again, we'd love for you to reach out to us. We want to be that one-stop shop for you on the commercial real estate side and the banking needs, and we will see you next time.